All right, so today we are getting started with actual content about trading. So we're just going to start with foundations today and introduction to what are stocks and what is trading, what are futures. So let's get started. So, what is trading? Trading is the skill of exchanging risk for potential reward by buying and selling financial instruments in a structured, repeatable process. So, what does that mean? Financial instruments are things such as stocks, futures, options, foreign exchange, cryptocurrency, commodities, ETFs, or bonds. That's a lot, but we only focus on mostly just futures. That's what we actually trade, and then we also pay attention to what those futures are of, such as stocks or commodities. Most commonly, futures are of stocks or of stock indexes. So there's options and all this other stuff, but we're not focusing on that in this course, nor do we ourselves trade that. So yeah, futures is where it's at. So you guys probably already know this, but we're just going to go over it anyway. What are stocks? Stocks are shares of ownership in a company. When you buy a stock, you own a small piece of that business. Profit comes from the stock price rising while you own it. Pretty simple. You can buy a share of a company, and at that price is where you bought in, and then your profit is simply when the stock price rises, you can sell it, and the distance from here to here is your profit. It's pretty straightforward. Stock indexes. This is something important to know just for futures. Stock indexes track groups of stocks, most notably the S&P 500 and the NASDAQ 100. These are pretty well known. The S&P 500 tracks the top 500 companies stocks in the United States, and the NASDAQ 100, as you can probably guess, tracks the top 100 companies stocks in the United States. Um, the Nasdaq is a lot more tech driven, but the S&P is a lot more stable. There's differences to both of them, but yeah, those are the two most common um, in regards to what we're doing. So let's actually talk about futures. What are futures? Futures are standardized contracts that let you trade the price of major markets such as stock indexes, like we just talked about, or like commodities. Your profit in this comes from accurately trading the price movement, which means that if you think it's going to go up, you'll take a long position, or if you think that price is going to go down, you take a short position, which we will talk about in the future. They're called futures because they are the expected future price of a stock um, or stock index. So if the future for the NASDAQ goes up, it's expected that sometime in the near future, the actual NASDAQ 100 itself will follow. So that's why they're called futures. I think it's a pretty accurate name. So why do we trade futures as opposed to all of these other financial instruments that we could trade? There's lots of reasons. Leverage is a great one. We'll talk about that in a couple videos. Leverage allows you to take as much risk or as little risk as you want to make as much risk or reward or as little reward as you like. We'll talk about that, but it's really good for managing your exposure to the markets. Structure, it's semi-predictable structure that moves based off of certain mechanics that we can learn and we can understand. High liquidity, there's lots of volume and lots of orders going into the futures markets, which means that your orders will get filled pretty reliably on a live futures market. Clean charts looks pretty simple. I mean, in the background, you can see kind of just a bunch of candlesticks, and you can add indicators and stuff, but it's pretty just easy to look at. Easy shorting, scalability goes hand in hand with leverage and also with prop firms is super important. We'll talk about that. It's these firms that proprietary trading firms that allow you to purchase an account for a little bit of money and do an evaluation. And basically, you avoid trading with your own capital. So we'll talk about those more later, but these are really great resources. And 23/5 market, meaning that futures markets are open 23 days or 23 hours a day, 5 days a week, just weekdays. So there's 1 hour where the market is closed. So you have a lot of time during the week. It's open most of the week where you can trade across 3 sessions, which we'll talk about as well. New York, Asia, and London session are the 3 sessions that basically break the day into thirds. And then there's 1 hour off. So all of these reasons just make futures really good choice if you're getting into trading. Yeah. So these are some examples of futures. Index futures are the most popular. So the S&P 500 is ES futures. The NASDAQ 100 is NQ futures. Then there's the Dow Jones. And then commodity futures, such as gold, which is GC, or crude oil, which is CL, or soybean oil, if you want to trade a pretty niche market, is ZL. So index futures are the most popular. Commodity futures are probably second place. And then currency futures and treasury futures, they exist, but I've never even looked at them, to be honest. So ES, NQ, GC, those are some of the biggest ones for retail traders, which is us. Those are the ones we want to be most interested in. But yeah, there are so many more markets out there, but yeah, there's just a handful of examples. So let's talk about what is the ultimate goal in trading futures. The ultimate goal is to be able to predict price action with a high probability on a daily basis, which means that you are going in to the markets on the charts every day thinking of how you can predict where price is going to go, predict if you're going to see a move up or a move down, and then you have to be able to execute on that properly. You analyze, you plan, you prepare your risk management, have good risk management. You execute, and then you review. And those are some skills that we will talk about in future videos. But yeah, that's kind of it. Yeah, in the next video is overall platform tutorial with Lucas. He'll probably show you Trade C. It's a great platform, so you guys can just go in there, take a look, and yeah,